Crypto Parabellum Podcast, episode number 16. It is December 22nd, and we've missed you all. It's been, 3 weeks since our last episode. But, good morning, gentlemen. How are you?
We're doing well. Good morning, good morning. We've been very lazy
Good.
lately. I think we missed 2 weeks in a row, but here we are.
Yeah. It also appears that I had some technical difficulties over here. I don't know if you guys are seeing that or not, but it'll be fine on the back end. And for those of you that are watching, you can see there's a fourth window here, which is pretty exciting for us. We have a guest, Andrew. Welcome to the program.
Hey, thanks, guys. Thanks for having me. Happy to be here. It's interesting and exciting times in the crypto space right now.
Isn't it? Isn't it? Yeah. And you have been very much a must follow recently, at least in my eyes, because you've been breaking some news on some things that I think people want to hear about. So it's going to be fun to talk about this and see where we go. But Andrew, you've been kind of at the forefront of what's been breaking with DCG, Digital Currency Group. At least on Twitter, I've seen you kind of I don't know if it's predicting or knowing, and I'm like, holy smokes, this dude's on top of it. So really excited to talk to you about all that, because I'm looking to hear from you. But it sounds like this thing isn't done yet, and there's some shoes to drop still, and that's gonna be pretty fun to talk about. But before we do that, would you mind setting yourself up a little bit for the audience, Andrew?
Yeah, so I've been in crypto late 2014, early 2015. I sold a TradFi company back in 2014, and kind of went looking for, what do I want to do next? And crypto grabbed my attention. I found myself at a fairly low key at the time out in San Francisco cryptocurrency hedge fund event, and in about 15 minutes of being there, I realized this is the next thing. For one reason and one reason alone. In that room were some of the smartest people I've ever met in engineering, in sort of what I would consider technology, and finance. And I thought to myself, these are three disciplines that rarely come together at the same time, and they're all here for a reason. And so I said, this is I'm gonna go down this road. Started a company at that point. That company had middling success. Shut it down in, I think, 2018. Ended up with a partner who had been an ASIC miner, a Bitcoin miner, since 2013. At one point, was running more than 3,200 machines in the Southeast. Yeah, really smart guy from an energy standpoint, and finding spots where energy was really, really cheap and cost effective. And he and I have been working on a company that goes by the name of Arch Public for 2 years now. We are very, very focused on utility in the blockchain. We build on the Liquid network and the Bitcoin network. And our focus has been things like access, trading algorithms associated with traditional markets, and insurance. Insurance associated with blockchain, digital assets, and assets that are kind of off the radar in terms of traditional banks. So doing some things in Europe right now that we're very, very excited about.
Nice.
Mm-hmm.
So wow, you're 8+ years in, so it's not like this is your thing.
Yeah.
Anyway, Alan, go ahead.
Yeah, so thanks for the background. That's super helpful to kind of get to know you better. I'm curious how that all led to, the intimate knowledge that you have or have had for the last several weeks now, sort of around Genesis and DCG. Before we go into like the timeline and what kicked things off,
Sure.
Let's establish some credibility there. Where are you typically finding your information? What ties you so closely to the organizations?
It's honestly been a version of right time, right place. So from 50,000 feet, being in the space for the time that I have, there's a conglomerate of folks that have been in that space for that amount of time. So you get to know people, right? You get to know people who know people who know people. And when certain, elements of the industry begin to shake loose or bubble up, you end up having conversations with people that find yourself in the right place, the right time. So when it comes to DCG and Genesis, I know several creditors of Genesis that put a sizable amount of capital with them, and by extension, we've come now to know with DCG. And so I was getting calls and getting texts probably a month before some of the news began to break.
Oh,
And frankly, they've been feeding me information. On top of that, they've introduced me to other folks. I've now ended up having lots of conversations with venture capital firms that have an interest in the situation in terms of distressed assets. I've had long form conversations with people that have built portfolio companies inside of the DCG ecosystem that are also creditors of Genesis. So
right.
it's kind of taken on a life of its own, right? And so
And
that that's kind of the architecture of where kind of the information that I end up spitting out on Twitter is coming from.
no, that's super helpful to
Hmm.
know. Do you find when you're speaking with them, it sounds like mostly it's from the creditor group
Hmm.
rather than like internal Genesis. What do you think the motivation of the creditors to kind of to speak with you generally is? Are they want to get this message out, but they don't want it necessarily associated with them? What
Yes,
do you think drives that?
the
Okay.
answer to that is yes. There's a sizable portion of these creditors that are high net worth, ultra high net worth individuals, and whatever anybody knows about a group like that, um, they generally aren't the loudest folks in the room. They tend to stay pretty quiet because they've
Mhm.
found, in their careers and in their, financial lives, it's better to do things, behind closed doors than to do things in public. Now, that doesn't mean that at some point, if the stress gets too much, if the confusion or frustration gets to a point where they feel compelled to file some sort of legal action, well, then it becomes public, right? So
Right.
um, that's the answer to that question. Is they'd rather have
Yeah.
some sort of resolution that keeps everybody from a public standpoint relatively clean. Um,
Okay.
but we'll see.
And just for like the disclosure aspect, are you a creditor of DCG? Do you work with DCG or Genesis, or simply just a bystander receiving information?
So no, no, and no. Not a creditor of Genesis. I don't have any business relationship with DCG. Um, Listen, I respect what DCG and Genesis do. They're huge, huge players in the industry. Huge commitment to crypto overall. Believers in what crypto has as it relates to the future of quote unquote finance, and what it brings to all different parts of the global population. um, so you have to respect what's been built there. The truth of the matter is 2015, 16, 17, even 18, the biggest venture capital player in crypto, you could make the case that it was Digital Currency Group, right? I mean, they own part of, or on the whole, 150 plus companies. You could a couple years ago, you could take a look at their portfolio and be like, whoa, they own a piece of everything. So, this is not going to be, a long form dissertation on DCG is bad, Genesis is bad. These guys are bad. For a long time, they were seen as, kind of, um, the North Star of the kind of folks you want to work with in the space, right? So that
Yeah.
doesn't mean that a set of decisions, can set somebody back. But yeah, they've done a lot of good in the space so far.
Yeah.
It feels like every crypto hero at some point has a villain arc,
Hmm.
whether intentional or not. They rise and they fall, and so I would be nervous for anyone that feels like they're coming into that next hero arc,
Yeah.
because inevitably it seems to be leading to their downfall. But so DCG and Genesis have a lot of corporate partnerships, right?
Hmm.
So like I think we're all aware of that. The aspect that I think will be most interesting to the listeners is probably the relation to Gemini, because that's where most, I think, average people are impacted by this in one way or another. So that started off, I believe, on November 16th is when Genesis, which was the lending partner of the Earn program on Gemini, paused withdrawals and messaged that they wouldn't be able to meet user redemptions, which was shortly after FTX. So from the best of your understanding, what led to that day? What steps or decisions or events by DCG or Genesis, and I think Genesis, led to the 16th, which was, hey, we got to stop these withdrawals.
I think the FTX shock, that was, you know, all that happened so fast, right? And the beginning of it started with, you know, the at the time quote unquote main characters. You never want to be the main character in crypto, right? Like you never want to be that guy. So the main characters, slap fighting each other on Twitter, right? CZ and at the time Sam. Um, and what came out of that is an incredible and enormous liquidity crunch, and a vaporizing of liquidity. And so when FTX went under, the perceived liquidity in the crypto ecosystem vanished, um, faster than anything I've ever seen, literally. So that liquidity vanishing, and then the confidence associated with the access to liquidity also vanished. So what happened was, in my mind, is smart people at Gemini, right? Nobody on this podcast would think that the Winklevoss twins are dumb people. They're not dumb guys, right? Smart guys, who also have meaningful relationships from a legal standpoint, a regulatory standpoint, right? They don't make a we're shutting down withdrawals because on a whim, right? There's real thought, there's real legal discussions, there's regulatory considerations, all of those things. And I think it came down to a realization that what DCG and Genesis thought were issues that could have been solved with liquidity very quickly became issues that where liquidity didn't exist anymore, and they're now left with massive holes on their balance sheets. So DCG and Genesis realized this very quickly, and then I would assume, I don't have direct knowledge of this, but I would assume that their first phone call to a quote unquote partner was to Gemini, because functionally the number with Gemini Earn associated with Genesis is 900 million bucks. So in a real world standpoint, Genesis' biggest number that they have to deal with is Gemini. That's not considered an intercompany, correlated liability, right? All the
Interesting.
other liabilities associated with Genesis, are intercompany type of issues, which a lot of legal stuff to figure out there. And I'm not a lawyer, and I've never even played one on TV. Um, and I didn't sleep at a Holiday Inn Express last night, so I mean I have no legal recourse here. So, but you can imagine that their first outreach was to Gemini. So to me, that sounds like the path that took. And so 34 or 5 days later, here we are.
Can we double click on one thing you said
Mhm.
there, because you talked about Gemini being the largest non intercompany loan.
Mhm.
And I think I know what you're talking about, but I want to double click on that so that everyone else does as well. I believe what you're referring to is the largest intercompany loan, if I remember right, and correct me where I'm wrong, was a basically debt transfer from Genesis to DCG. So Genesis was in the hole maybe with an Alameda loan. You tell me more on that.
Mhm.
And I believe DCG said, hey, we'll take that on for you. Where am I right? Where am I wrong on that?
I think it was a 3AC loan, to
3AC.
be clear.
Okay.
And it was huge. It was anywhere between $1.5 to $2.1 billion at the time. So DCG decided to swallow that. But more importantly, there was another outstanding Genesis 2 DCG loan to the tune of $1.1 billion. So you're looking at liabilities again to a parent company that's more than $3 billion. So while the Gemini liability with Genesis is enormous, $900 million, it pales in comparison to what Genesis owes. What Genesis? No, sorry. What DCG were to owe Genesis. So there's it's the meme of the three Spider-Men, right? The three Spider-Men are pointing at each other,
All pointing at each
right?
other.
And they're like, okay, DCG owes this to Genesis, but Genesis owes this to Gemini, and then but if Genesis has issues, then DCG has issues, so DCG needs to work with Genesis. But there's no.
They've made it everyone's problem.
What I've come to understand, and this is again 50,000 feet. There aren't any good answers here.
Right.
If Genesis were to file for bankruptcy, those loans, a sizable portion of that $3 billion in loans are callable, right? So if Genesis, again, which is a portfolio company of DCG, right? If Genesis declares Chapter 11 bankruptcy, then by law, bankruptcy lawyers and bankruptcy court would force DCG to cough up $1 billion plus, right? And as far as I can tell, DCG doesn't have that money. As far as I can tell, the liquidity to go and get that money, everybody on this podcast would assume, and no, doesn't exist right now in crypto,
Right.
or there is not the traditional finance appetite to toss $1 billion into crypto right now.
Right.
That's gone too.
So,
and if you don't mind, real
Yeah,
quick,
please.
because you alluded to something when you were kind of giving your intro
Mhm.
to all this, and I was like, oh, I want to jump on that, but we were kind of talking about it. You said even a month before this stuff went down, you started to kind of hear about it a little bit. Was that because of like the residuals of the 3AC loan, or can you talk about like why even before? I mean, look, I was pretty happy with where crypto was moving up until like the start of November, and then all of a sudden we took that U-turn again. So can you talk about that, like up to 30 days before the event we all saw with CZ and SBF?
Sure.
Like what
So
there? Yeah.
I've got to be a little bit careful as to the roads that I go down here, both in terms of the people that I've talked to and my own position in this space, right? You don't want to piss people off.
Please,
and
yeah.
Before I say anything, again, I want to add that I want to see a positive resolution to this. Like a positive resolution to Genesis, DCG, Gemini is a really, really good thing for the crypto ecosystem, not only for individual investors that have money in Gemini Earn, and I know a bunch of them personally. I have friends, close friends that have money in that program and are wanting to hear what's going to happen, right?
Of course.
So I want a positive resolution of that. So all of that out of the way. Genesis creditors, and I'll say, a half dozen of them. In my initial conversations when they started to come to me, they were concerned that they weren't getting the full story as it relates to where the loans were, what the intercompany balance sheet looked like between Genesis and DCG, and they'd been given some information, but then that information changed, and then it changed again. And so when the FTX collapse happened, and there was an initial week where all hell was breaking loose, and it looked for almost a near certainty that Genesis, would have to declare bankruptcy. People were upset. People were upset because there was a timeline of, we were told this, then we were told that, and then now we know this. And so Genesis creditors, who again are different than Gemini in general, than Gemini earn creditors, right? Gemini earn creditors, in traditional finance, there's a grouping of customers, and generally they look like this. There's a group called mass affluent type of folks. Mass affluent have 50 grand to 250 grand in liquid assets, right? High net worth individuals are $1 million plus. Ultra high net worth folks are 10 million plus, right? So Genesis creditors, generally speaking, are that ultra high net worth group. Gemini earned creditors are your mass affluent type folks. So Genesis creditors, your ultra high net worth type of individual or entity, a good portion of those are family offices, to be quite honest. They got a different set of expectations. They've got a different set of, we expect and deserve access to information and data and conversation that is different than a mass affluent type of individual.
So if I'm just kind of cutting through that a bit, it was those people have expectations on the information they'll be given about where their investments are. They were given some information, and when you're given that information to that level customer, you expect that to be gospel. And not only was it changed once, it was then changed again. So it was kind of that confusion around like, all right, people don't really jerk us around like this,
right.
or
Right.
lie. Now they are. Andrew, do you have any connection into that? So like that,
Yeah.
and again, and I'm not saying that was directly how it went, but it's just like there's some smoke
Right.
here. Let's figure out where the fire is.
Yeah,
Yeah.
there was no, remember, nobody knew about the $1.1 billion promissory note that existed from Genesis to DCG. Nobody knew that existed, right? It wasn't public information.
And whose money was that Genesis lent DCG?
That would be Genesis creditors, right?
So now you have a situation, just to double click on that, as Alan likes to say, because Genesis Earn or Genesis Yield program, which is separate from Genesis Cold Storage Custody. And I have some questions about your thoughts on their custody stuff. But on the lending side, that was tapped into by Gemini Earn, as well as all these private offices and everybody else. But there's also countless smaller retail apps. Donut app is a good example that also built into the APIs for Genesis Yield and had thousands or tens of thousands of smaller retail customers. So I think that impact is pretty big. But on paper, and keep in mind, my thoughts about Genesis are in line with yours that you stated at the beginning of the call, so I won't restate those thoughts. But on paper, it looks like two companies owned by the same people. One took customer funds and lent them to the other to invest, do whatever with. And that sounds very similar to a story that's ringing a bell from, I don't know, 8 weeks ago, where two companies owned by the same person, one took customer funds and lent them to the other. How is this any different in your eyes?
That's a really great question.
That's a
Joel.
slippery slope, isn't
Yeah,
it? Because now we're talking.
It is, and it's. I think that I'm not entirely sure if there's a legal difference, which presupposes a lot of follow-up questions. But before we get to any of those, I think there's a philosophical difference, though. And that philosophical difference is we're talking about, again, the group of creditors that are having discussions with Genesis about fixing this issue, again, are ultra high net worth folks. The mass affluent folks at Donut App or Gemini they don't have a voice other than leadership at those organizations, right? So it's a
You're saying one creditor is a sophisticated creditor, and there are certain when you are so listeners know when you are considered a sophisticated investor, a credit investor, lots of different terms for it. You can kind of do anything. You can kind of invest in any
Yep.
sort of yield, crazy, whatever you want,
Yep.
as long as you stay inside these guardrails, you can invest in anything. And the argument is because you're sophisticated, you understand the risks that come along with it. So if you're a sophisticated investor giving money to Genesis, who's giving money to DCG, who's ultimately giving money to Alameda, who's giving it back to FTX, who then gives it back to Alameda, and so on and so forth, at the end of the day, there is this legal ground of, well, that's the risk you took to get this 12% that we were paying you. But when you're a non-sophisticated retail investor like Gemini Earn customers and the tens of thousands of customers that use Donut App or one of the other similar types of services, there's rules to protect those people.
Right.
And now the question becomes, did they break those rules no different than FTX did by lending customer funds to Alameda to do the exact same thing?
Well, one of the smartest things that DCG and Genesis have done that wasn't done in the FTX saga is DCG leadership, Genesis leadership have been very quiet, off of social media, off of any sort of front-facing opportunity, and every word and syllable that has come out of those organizations via a statement has been, as you can imagine, remarkably lawyered, right? So let's cover every base that we have to cover, or if the smart legal thing is to not cover any base, let's not cover any base. And so they're aware that these real questions legally exist. They're really aware that if they misstep, if they say the wrong thing, that is just going to shine a brighter light on the questions that Joel is asking. Because as of right now, those questions they've eluded those questions largely. It's largely been a story about a couple of behemoths that seem to make some fairly boneheaded choices about how they were going to invest in some of their own products and issue loans associated with those investments, right? So we can go down a road where it looks like DCG decided our grayscale GBTC product is undervalued. We think it's an opportunity for us to now double down on the quote unquote GBTC trade. And so, yeah, let's go ahead and do that. And that
can we talk about that piece? Because one thing that you said earlier was like, hey, I want to see a good outcome here. And everyone else should want to see a good outcome here as well if you are someone who holds crypto or wants to operate in the space in the future, or see the market succeed. And I think the reason you say that is because of the tremendous market risk that comes from GBTC and how this whole situation may or may not impact GBTC. So maybe can we touch on what are the paths, though there may not be many, for DCG to get out of this or Genesis to get out of this? It sounds like a plan was presented to them by the creditors as a group saying, hey, this is what we think you should do as the creditors. I believe your coverage noted that perhaps DCG/Genesis comments on that, accepts it, denies it, or otherwise by Friday of this week. Do you believe that like giant pot of liquidity, the only place it could possibly come from is GBTC?
I don't see another path unless it's hidden somewhere that nobody with meaningful brain cells has figured out at this point. I don't see where else it comes from, and I think it's notable that one of the few communications over the past month from the organizations we're talking about, DCG, Genesis, and Gemini, was the float of a 20% tender offer of GBTC shares. that's very meaningful.
Describe what that is exactly, just for the
So
average person.
I'm probably not the best guy to describe what a tender offer architecture would look like. What I do know is it's going to unlock a certain amount of GBTC, but my guess is Joel was probably better at describing what that may look like, if I may punt to him. I just know that it's a way to unlock liquidity for DCG. Now, the pattern that needs to be followed for that to have to happen, Joel probably is a little bit more versed in what that's going to look like step by step.
I wish. I have not read upon it enough at all. I just heard that it's a definite liquidity event on the market for those shares.
Yeah. I think what it just does is makes the underlying asset, which is Bitcoin or Ethereum and the Ethereum Trust, withdrawable, for lack of a better word, because
sellable,
of the sellable, right? Because the GBTC asset, I guess, I don't know what you refer to that as, is trading at something like a 50% discount. And it got worse and worse and worse over the last couple of weeks as this is all unfolded. And so if you were to be able to redeem any Bitcoin from that trust, theoretically, what's a 50% discount from here? Like 8.5, something like that, something around $8,000 a Bitcoin. You could then turn around and potentially sell it for 16, let's say. And so they can recoup some of that loss from now.
Yeah, so it's a from a 50,000 feet standpoint, it's their version of, if we need to raise capital, if we need to create liquidity associated with fixing this problem, right? If we need to satisfy a sizable amount of our creditors, but we have to have meaningful liquidity as the foundation of that satisfaction, right? So here's a scenario, right? So they've got to raise, I don't know, $500 million, right? Well, where's that going to come from? It's obvious at this point it's not coming from a venture capital firm anywhere. Not going to happen. So what's their next? Right.
They already tried that.
Their next opportunity to do that is they've got to look internally, right? What assets do they have to sell? Everybody on this call knows that while we appreciate and probably value a good portion of their of DCG's portfolio companies, right, who've done good work, at times have been valued at much different values that they are now, and several of them I think will stand the test of time. That says nothing about what they're valued at today, right? So everything in crypto is down 60, 70, 80, 90 plus percent, right? So their portfolio companies on average are probably down 85 plus percent. So that liquidity pool is difficult, right? So what's the liquidity pool that they have to dip into? It's GBTC, right? And so, go ahead.
I think there's a really obvious reason why this has been their last resort, or this will be their last resort. I think it's important to touch on why. My opinion of why this is their last resort option that they really don't want to do, but if there is no other option, is because it's a cash cow for them. GBTC plus the rest of the trust, I think, Andrew, correct me if I'm wrong, makes them somewhere between $250 and $300 million a year. And that is because of the fee collection on that product. So any sort of winding down of that product or allowing people to withdraw, even at any significant level, reduces their cash flow. And that cash flow, they were hoping back 6 months ago, 8 months ago, whenever that internal loan happened, they were looking at their cash flow and they're saying, yeah, we could pay this back, no problem. And so they don't want to mess with that cash cow because it's sort of the only thing they have left, is my view on it. So do you have any knowledge of what the creditors, which I think was largely from Gemini, basically presented back to them as the plan? Do you know that it's GBTC?
So
or are we just
I can't disclose the specifics of the plan. What I can disclose is that the creditors have put forward a meaningful proposal and have worked with DCG lawyers, DCG advisors, and then the creditor group's own advisors and lawyers to put something, to propose something in good faith that they think works for the entire situation, not just for, the quote unquote ultra high net worth creditors associated with Genesis, but the larger ecosystem that frankly is owed a bunch of money across the board.
Yep.
I've heard percentages of the creditor dollars, but I've been asked several times not to share that, which is why I haven't shared it on Twitter. But DCG and Genesis would be fairly smart to give this proposal real consideration.
And when you say percentage of dollars, I won't ask you to give a specific, but I think what you mean there is that they're basically proposing like a return of assets of some percentage of whole. Is that what you're suggesting? Okay. Yep. So I'll just use random percentages. I'll use the FTX example in Sam's own words to prove a point here. In Sam's case, he estimated or guessed or wants you to think that the FTX bankruptcy will result in something like 20 to 30 cents on the dollar. So where we think the DCG Genesis proposal is probably like, hey, we'll take X on the dollar if you can wrap this up within X period of time. Is that how those things
typically
are
those are structured? But I will add that this is much more complicated than that, right? So if it was simply a proposal that says, we'll take X, cents on the dollar, you don't need a bunch of advisors and top legal minds to figure that out. It's again, it goes back to the 3 or 4 Spider-Mans all pointing at each other. There are trigger points at almost every move associated with outcomes here, right? So if a Genesis declares bankruptcy, you've got callable loans from DCG, which puts them in a serious liquidity crunch, right? Which then, because they are, if not the largest, they're close to the largest GBTC owner on the planet, right? So then that puts Grayscale in some level of redemption peril, right? So they're trying to avoid that cascade of potential outcomes. So how do you avoid that potential cascade of outcomes? I don't know. I don't know. I'm not an advisor and I'm not a lawyer. But my guess would be is that they're trying to structure a new type of debt arrangement that adjusts timeframes, that adjusts certain types of capital return structures and assumptions. That would be my, let's call it, educated guess.
Does that so that solves the immediate like legal or bankruptcy risk issue for DCG Genesis, but does that solve any of the immediate liquidity issues? Like for instance, $900 million is the number that's being used for the Gemini Earn product that's sort of locked there. You have who knows how many tens of thousands, maybe 100,000 plus people that impacts. They're all panicked, or they feel some level of panic now. Imagine that they agree to a longer payback period, a different debt settlement. That you're still going to have $900 million of probably immediate liquidity, where people, as soon as they can, are going to rip every penny back because they're like, I just want out of this. This is not worth the 8%. And I'm never going to touch this again. That doesn't get solved by this, or does it?
The end of your commentary there is absolutely correct. That assumption has to be made by their advisors and their lawyers. I would avert our eyes to a couple of things over the past week. And again, when you have really smart people in a room, leadership at DCG, leadership at Gemini, and they've kept quiet, right, on the most part. But they've mentioned things like tender offers and what's the other term that they used? There's another term that they used about the liquidity duration concerns. Okay, I think that's the phrase that they use, liquidity duration, which is to say that there is a large note outstanding that's a 2032 note. There's a large note outstanding that's a 2023, right? So any answer to these types of questions has to be focused through the lens of those pieces of commentary: a tender offer and liquidity duration. Those are the pillars by which internally they're trying to solve this problem. Now, if we begin to trickle that down to what does it mean for Gemini Earn customers, say the guy that I've had lots of folks from Gemini Earn reach out to me in DMs on Twitter, guys that, folks that, have 10,000 in the program, 50,000 in the program, $30,000 in the program. We've all lived enough life here. All of us, I think, were around when the financial crisis happened. The little guy isn't the one that wins in this. That's the truth. It's not right.
Well, Andrew, sorry to cut you off. Speaking about that little guy, that's where I have concerns on the custody side. We're talking about their lending program, obviously, and withdrawals are still suspended, right? Custody has been unaffected, and I presume to believe at least, that all the cold storage custody services that Genesis provides are just one-to-one held in cold storage like they're supposed to be. So fingers crossed that that's true. If Genesis as a firm were to file for bankruptcy, is it your opinion that the assets in custody get frozen, kind of rolled up into this bankruptcy to be hopefully paid out at a later time?
The answer to that would lie in the legal setup of Genesis as a firm and the entities that are Genesis custody, Genesis lending, and there are 3 or 4 other entities that exist inside of the Genesis, brand. So I don't have access to the corporate documentation associated with how are those entities split. Are there legal firewalls that exist associated with that actual question that you're asking, right? The answers would lie there. And I would assume, now we all know would assume sometimes gets us, right? So all the caveats there. But I would assume that, and this is my deferral to, I still believe that potentially the folks that are the leadership of these folks want to do the right thing and have been smart players in the space up until this point. I would assume that they were smart enough to, make meaningful legal distinctions between a Genesis custody versus a Genesis lending. To not do that would be problematic, as you are, given the nature of your question.
Yeah, it would be it'd be detrimental, because I think the lending impacts small apps that were using sort of the lending,
Right.
Gemini being not small, Gemini being the largest. But on the custody side, I don't think people realize that so many real, I'll call them, but like TradFi financial institutions use Genesis custody. And so if there were issues where, hey, those assets should be backed one-to-one, and let's assume for a moment that they are, but due to a bankruptcy, they become temporarily unavailable as that gets litigated, adjudicated, however that's described, they're stuck. That's a problem for a lot of financial institutions that have built solutions on top of Genesis custody as their back end. So I think there's 2 major risks that make me really nervous about this whole thing. One is the impact to custody, because that is going to have huge waves for all these institutions that you didn't realize were built on Genesis, but they are. And then the second thing is the overall market impact of a GBTC unwind, because I agree with you that is the only solution that they have. given the public knowledge. Now, maybe they have a pile of cash that they're sitting on that nobody knows about. I doubt it. Otherwise, that would have been the first thing that they deployed. If GBTC is unwound or allowed mass redemptions or even some redemptions, you have a bunch of people that have been staring at a 50% reduction from NAV. So if Bitcoin's at 16,000, they've been looking at $8,000 in their account. In their retirement accounts is where GBTC is often held, in their brokerage accounts. And the second that they're able to suddenly, you basically see that balance double instantly. If you were to allow redemptions, you got to believe that just the psyche of many people say, wait, I've been looking at this account balance at $8,000. It's suddenly at 16. I'm done. Yeah. And I don't think that the liquidity is left in the Bitcoin market, much less the ETH market, et cetera, et cetera, et cetera, to be able to take $10 billion of Bitcoin. Is that where the current value of GBTC of underlying is held?
It's the reason why the language associated with a 20% tender offer. Okay. So that there's so much behind that for that to be released, right? That language and that possibility to be released. That means that the lawyers for DCG and advisors for DCG have spent hundreds of hours evaluating the very scenarios that we're talking about in this podcast before releasing those words. They have to know. So, and I don't know what those scenarios. It makes perfect sense to you and I that if they open up quote unquote redemptions, that there's going to be a wall that will overwhelm Grayscale and GBTC to a point of, we don't want to have anything to do with this anymore. And I'm out. And by the way, like you said, I just doubled my money, right? That's about the only product in crypto right now that if you hit the sell button, right, in the way that the trust is set up, you double your money. It doesn't exist anywhere else, right? So point being is, the lawyers that are getting paid at minimum $1,000 to $1,500 an hour, and there's not just one guy sitting in there figuring this out. There's lots of them, right? For the language of a 20% tender offer to make its way for public consumption is something. They have figured something out that avoids what you're talking about, Alan, in some way. Somehow a 20% tender offer, it would seem to me, would avoid a rush of redemptions, that it would be only 20% that would be even allowed to be redeemed. You see what I mean? That makes sense to me. I don't know if that's legally feasible. I have no idea.
So is it? This might be. So I'll happily be the dumb guy on here. I'm not a builder. I'm a trader, and I just know these guys. I've known them for a long time. But I'm a trader. I started trading equities 12, 13 years ago, and I got into crypto because it's more fun, better volatility, et cetera, et cetera. As a trader, if I knew that was coming, like, my brain immediately is going, find ways to short Bitcoin, or quite frankly, because it sounds like what you're talking about is 20% over X amount of period, right? Is what they'd be talking about. Like, we can release X amount and you can't jam it all in the first 24 hours or whatever. That will cripple the industry until that redemption time is done. Like, think about it. No handouts are ever given in crypto, ever. So if you're looking and going, all right, we're going to do 20%, it's going to be spread out over 5 years. We're in a bear market for 5 years because we're not going to hook people up for making bad choices and have another run in the market. It's just not going to happen. That's not how this industry works.
I think that timeline's unrealistic, though. And the reason I would say that is because I think a lot of people's hope in more recent buyers of GBTC, and this is just my assumption, is that they hope that there's a path towards making this product an ETF product. And the day it becomes an ETF product, problem solved. And so 5 years, you would have to imagine that this ETF this ETF problem gets solved within 5
So
years. And
so you could be buying
it would be
$16,000
much faster than that.
Bitcoin for $8,000 right now on the
I think
long
that's what a lot-
play that when the ETF happens, you're like, hey man, I don't need to sell. I just bought Bitcoin for $8,000, which is a value level for me for long-term holding. Is that the idea?
That's what I think a lot of GBTC buyers recently have felt. And unfortunately, it has only gotten worse. The discount to NAV has only increased over the last 3 weeks or 4 weeks, or I guess we're 5-6 weeks into this now. But it's gotten worse and worse. But people are like, yeah, hey, if I want to buy Bitcoin, would you rather buy $16,000 Bitcoin that's liquid or $8,000 Bitcoin that's not liquid? And unfortunately, a lot of people said, I'll take the $8,000 that's not liquid. I think this ETF thing gets figured out eventually. And the spread keeps getting wider and wider and wider.
Doesn't that make it less likely, though? Sorry, Andrew.
Let's peel back just a little bit and let's look at some outside of the DCG and Genesis world actions that have happened in the last couple of weeks that still play a part in this story, right? So I'm a huge Michigan football fan. I grew up in the suburbs of Detroit. Yeah.
Same, man. Go blue. I'm a season ticket holder. Let's go.
Go blue. So this
all right, we're gonna be all right. You and me are fine.
Right? So let's start with Cathie Wood, right? Who, a lot of people in traditional finance, want to she stinks, right? She doesn't know what she's doing. She stinks. She doesn't know what she's doing. Well, Cathie Wood knew what she was doing for a really long time. Okay? Really, really long time. It's no different than 2020. Jim Harbaugh has a 2-4 season, right? And half of the people that are Wolverine fans want to broom him out, right? I wasn't one of those guys. And I thought to myself, wait a minute. Jim Harbaugh didn't forget how to coach because he had one bad season, right? So Jim Harbaugh's still Jim Harbaugh, guy that's been wildly successful in the NFL, wildly successful now in the college ranks, and previous to 2020 with Stanford, San Diego, an amazing coach, right? And it's proven that out, right? Cathie Wood is really, really smart, okay? Really, really smart, and is really comfortable with risk, right? Well, who bought a bunch of GBTC lately? Cathie Wood did, okay?
Yeah.
Now, a bad year, which Cathie has had, doesn't make her not what she was in 2020, 19, 18, 17, 16, 15, okay? She's really smart, right? So she knows, Cathie Wood has the ability, just like anybody else. She runs a public firm, but she also has a venture capital arm, as does the A16Zs of the world, a bunch of places, right? So Cathie Wood chose to deploy capital in the midst of the wild concerns, and all of them seem to be serious and well-founded concerns associated with GBTC, a tender offer, a discount DNAV of 50%, a depressed overall GBTC price that's anywhere from $7.50 to $8. She decided to push in to that risk, right? So what does that mean? Does that mean that there's an arbitrage play associated with the 20% tender offer? That seems to make a little bit of sense. What does that mean?
Yeah, I mean,
what does that mean in terms of a potential GBTC, Genesis, Gemini, DCG package that includes liquidity associated with a 20% tender offer and includes a reduction in creditor repayments and handles liquidity duration that ends up being a plus outcome for GBTC and ARK's position? These are all things that's the point of all of this, is that it's very difficult to find answers that my simple brain wants to say, all right, this is what's going to happen. A Genesis bankruptcy was kind of, it seemed like inevitable, and okay, that's what's going to happen. But then you get another piece and another piece and another piece, like, wait a minute, the Genesis bankruptcy would be like quite possibly the worst scenario here, because it makes, it turns into real solvency / liquidity issues for DCG, which then turns into way more than probably a 20% tender offer associated with, GBTC's position.
Yep.
Yada, yada, yada. Right. And oh, by the way, if Genesis declares bankruptcy, that 900 million that's owed to Gemini Earn folks, that is gone. That their money's gone. That's not, there's not going to be a solution for those folks. Right.
So it sounds like to you, because of maybe this is my pea brain oversimplifying things, but it sounds like based on what you're saying is the silver lining of them being so woefully intertwined is that they actually have to work together to find a resolution, or else everybody's screwed.
Fair way to look at it.
Fair?
Yeah, that's a fair way to look at it. It's
had they not been so intertwined, it wouldn't have happened. Each silo would have fallen on their own. That would have been what it was. But
a month ago, in my initial conversations with creditors, there was a pretty significant amount of I'm mad, I'm pissed off, I didn't get the information that I thought I was getting. I am not happy with both my financial position and the ethical potential issues here. And as time has gone on, based on your premise, Jared, that has softened in a big way. And creditors want a resolution. And now, of course, they want the best possible resolution for their individual situation. But they realize what we've come to understand on this, this podcast, that the initial reaction of I'm angry, I'm going to sue, they're going to declare bankruptcy is nuclear waste. It's a tire fire. It's a garbage dump fire, right? Nobody wins. It's all bad. So that has softened, and the reason why DCG and Genesis are, being very careful about what they say, as well as, not saying anything for now a month to some extent, is because they've got to find an outcome where they avoid, whether in earnest or at least in the way that it looks and sounds, the very real questions that Joel has been asking here. Where do the funds come from? How were they used? How is this different than FTX? Given that these aren't, as we come to understand, Sam being a fairly drugged up, making wildly terrible decisions, right? The group of guys in this instance are not that. These are thoughtful guys that up until this point have built meaningful brands and reputations in crypto. So unless they're determined to destroy that, right, based on the questions that Joel has asked about the flow of customer funds, they've got to come up with a solution that handles that, or at least is marginally believable and satisfies constituents that will, in a way, go out and parrot that narrative.
Yeah.
It makes sense. I mean, DCG has every interest in ensuring that the Bitcoin market and the overall crypto market doesn't crash further than it already has, because their problem gets worse as Bitcoin falls, because the value that they have in GBTC falls. And so the pile of cash, the only pile of cash left, gets smaller if that happens. So, Jared, to your point, as a trader, I think you would agree that, at some level, everything is priced in. And now you can argue like crypto's not great at that, but I think the market is maybe trading where it is, knowing that this risk is out there. But if it did actually come to like immediate liquidity, and I'm sure it would never be all grayscale Bitcoin is suddenly unlocked at once, and it that would be like a a COVID crash day, and you would see exchanges have to shut off to save us. But so Andrew, for sake of time, what question have we not asked that we should have today? Is there anything else that you think is important for people to know? That guy that has money on Gemini that's, you know, hoping for an answer.
I think I don't.
What
I
have we
don't know
not
if
asked?
there's something that hasn't been asked. I think Joel's questions around where did the funds come from ultimately and where did they go. Uh, I think those are very, very important questions given the current conditions and confidence that needs to be restored in the crypto space. Those are very, very important questions. For the guy that's, you know, go ahead, Jared.
Let's just say real quickly, because what you're talking about from a transparency perspective and what they're trying to do in the resolution is your thought that whatever all the smart people in the room trying to work something out here, all those questions really will be answered, or it'll just be good enough? Like, what do you think actually ends up happening?
I'm a fairly realistic / cynical guy, right? So my assumption is that when you've got that many lawyers in the room, that many advisors in the room, you're finding the best possible solution for your brand and your capital position, right? So, and those may at times be congruent paths. Those may at times capital and brand may be different paths. I would assume that you know, Genesis would want to remain a major, you know, liquidity provider and institutional type of brand associated with DCG. I would think that DCG would want that to continue. I would think that they would want their Grayscale brand to recover in some way, shape, or form from a reputational standpoint, even if it takes a year, 2, 4, 5. So all those things are in play. You know, are we going to get a you know, a thesis about every dollar and every penny and every decision? No chance. Yeah, that.
Okay. It right on top of that, because it sounds like what you and Alan both came to on this. You're like spinning this forward, and maybe again this is me oversimplifying things, but does it not? So first off, just yes or no. The best potential outcome is an ETF is approved from everybody on the call.
Yes, but that's the least.
I mean, I don't know about best because I don't know all the outcomes. I would say yes, that's a really good outcome.
Okay. So knowing that, like, based on what we talked about, if the ETF were approved, where like you have that 1-to-1 in and out, and there's an ETF that you can whatever, because then the Cathys of the world and those people are loading up, and they are the buy wall to hold it because they'll have the premium, right? So like then you're like, hey, this is that shows up,
but
and
Jared,
doesn't kill the market.
Yeah, it's the best outcome for the GBTC price, but is it the best outcome for the crypto market at whole? Because if you're assuming that Cathie Wood's going to come in and buy GBTC, you also have to assume that they're going to go redeem on the other end of it, and that
they're going to take the arbitrage.
Yes, and so like that means Bitcoin has to meet somewhere in the middle, and that's 13K or 12K.
Okay,
and so it can be. I would say the best outcome is that they agree to some small percentage that they believe the market can absorb or is already planning to absorb, because the 20% number's out there. We are theoretically trading on the idea that 20% of GBTC might be redeemable.
Well, okay, so fair enough. So yes, and with caveats, and that's why I kind of simplified it, because what it comes down to is who approves the ETFs, guys?
Nobody is the answer.
Who would approve the ETF?
No one's going to approve it right now.
I know, but like if somebody were to, would that not be the SEC? Would that not be going back to Gensler and people saying yes? So we're essentially saying that the best possible outcome for crypto at large, for Bitcoin at large, for all these creditors, for all these people, is going to be the SEC saying yes, you can have an ETF,
right, which is why,
like, that's what we're saying.
When a total of three meaningful statements have been put out in the last 3 weeks. There was an initial statement from DCG that admitted to the promissory note, admitted to other loans, and admitted to, on paper, what it looks like their situation is. Then there was the Grayscale investor letter, which worked very, very hard to distance themselves from DCG and Genesis. Then there was a Winklevoss essentially a tweet / release associated with, we've put a proposal in front of DCG and Genesis, and then there was the communication about a 20% tender offer. That's the whole thing right now. That is finding a way forward associated with a tender offer. Whatever the proposal numbers are, my best guess is there has to be a delta between that 20% tender offer and whatever the Genesis creditor group's tender offer looks like. There has to be a delta in terms of total capital between a discount and a tender offer, right? So let's say the Genesis creditors tender offer is X, and I'm sorry, the Genesis creditors discount to their capital is X, and the tender offer would equal Y. That algorithm would have to turn into a total of liquidity that would begin to fill the hole and begin to make meaningful sense as it relates to, again, the language that they used associated with liquidity duration, right? There has to be an equation that not only works, but can be enough of a narrative that people believe it, right? That they believe it. Because if we know anything,
Andrew, thank you.
In general, from a populist standpoint, right? There's not a lot of geniuses out there, right? But there are some real smart people in crypto, right? That, as I mentioned in my genesis of starting my crypto journey, I was at a conference that had the smartest people in finance, tech, and engineering, right? So they're going to, whatever is announced, they're going to turn that thing upside down, right? They're going to turn it upside down. So if you're DCG, Genesis, Gemini, Grayscale, man, that's the reason why they're paying rooms full of lawyers. You guys remember the movie Michael Clayton? You ever seen that movie? Michael Clayton. Okay, if you have, you haven't. So the movie starts with a walk down a hallway of a massive law firm in New York City, right? And then you walk into a room, and it's filled in the middle of the night with 70 lawyers, right? And what they're doing is they're putting the final touches on a decade-long class action suit associated with an agricultural company that had killed people, essentially, right? Well, that's the scene associated with, we have to find a solution here for DCG, Genesis, Gemini. There are rooms full of lawyers that the only reason that they're not at home for the holidays right now is because they're getting paid $1,500 to $2,000 an hour to do this work, right? And so it's their job to come up with a solution that, makes parties reasonably whole while it also being reasonably believable, and limits the liability associated with the brands and the individuals associated with the brands, right? It is.
Yeah. It's a tall order for sure. Andrew, thank you so much for coming on.
Fun.
I really appreciate your time. And also thank you for all the information that you've been so willingly putting out on Twitter, really to no benefit of your own other than notoriety. I mean, I've talked to you a couple times. You've been on hours and hours of calls with Genesis creditors and no skin in the game other than just trying to keep people informed. So thank you for that. I've got one final question for you that should be easy, or maybe not easy to answer, but a short one. What percentage chance do you think around DCG
50-50.
Genesis accepting the offer that they've been given this week?
Yeah.
Okay.
That's better than I thought you were
We'll leave it at that. Jared, if you would play us out.
I will. Thank you again, Andrew. Pleasure meeting you. Follow him on Twitter at AP_ArchPublic.
Yeah, sure.
In the video, I'll have your Twitter information up over your picture here. But this was a lot of fun, and if we get some meaningful updates,
no problem,
would you come back and chat with us again? That's awesome.
You guys too.
Cool. Well, hey, have a happy
Cool.
holidays too,
All right.
Andrew. It's a pleasure meeting you. Let's
Like
let's
it.
play out of
Dig
here.
it.
We got our sweet baseline music coming out. Crypto Parabellum Podcast. This was fun. Episode number 16, last one of the year. I can say to you, because we got holidays, we got times off. Hopefully, we have more resolutions next time. Next time we talk. But everyone, have a good holiday season and take care.